Warning, this video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all.
Alright, hello and welcome to Camel Finance. I'm your boy Camel, and we got a few things to point at today. Okay, so first of all, I wish I had something else to say, but it's just the same stuff over and over again, right? Last week, we've already went through this. I was talking about how there's so many brutal rejection for Bitcoin type comments. And I was saying last week, okay, sure, but did you really expect us to hot knife through the most important resistance of this Bitcoin cycle? Keeping in mind that resistance goes all the way back to March. To visualize this, I drew the red line across the top here and I said, look, I still maintain this is the key level. Now, that just so happens to be exactly where we rejected. Again, it speaks to not being able to just hot knife this thing. It speaks to managing our expectations. Yes, we're getting some kind of rejection here, but it doesn't necessarily imply we have to go to new lows, right? As ever, okay, manage expectations, expecting to hot knife the bull market on and off button is just kind of unrealistic in my humble opinion. So once again, I say, if you're out here saying things like Bitcoin is crashing, great, another dump, well, you may just need to find yourself a girl, mate. On a little bit more of a serious note, okay, I wanted to talk about this today because I've been showing this of late. This chart has been doing the rounds and there's this whole thing where the banks are sitting on massive unrealized losses. And a lot of people are kind of confused because it's like held to maturity versus mark to market. So I thought I'd just briefly explain this, then show you a couple of things that are quite interesting, and then show you a video that I actually covered this over a year ago in this video right here, the financial crisis you didn't know existed. And it's only got 264 views. So you probably haven't seen it. But first of all, let's deal with this held to maturity versus mark to market, okay? If I was to buy, in this hypothetical example, one Bitcoin at 60K, here we go, and then the price was to drop to 30K. Needless to say, if I bought one Bitcoin at 60K and it dropped to 30K, I would be down 30K. But how this whole HTM thing works, okay, is instead of mark the asset price at the fair market value of 30K, I would still be holding my one Bitcoin. And I could just say, no, okay, HTM, we're just going to mark this on the books as I'm still holding 60K. And that would be absolutely fine up until perhaps my wife was to come and force me to sell my Bitcoin. And then, of course, I would be forced to sell it at market at its fair market value, which would be 30K, realizing the loss. So that is exactly what is going on here, okay? At the moment, they are pricing these things on a held to maturity basis, which is essentially the same as, like I said, you buying Bitcoin at 60K, it drops to 30 and you go, no, I've still got 60K's worth of assets because that is what I paid for it. And that's totally fine and okay up until the point when somebody is forced to sell at market, of course, because selling at market reveals the true asset price. So pertaining to the unrealized losses from the banks, okay, this isn't a problem up until customers want their money back. And then if we were to see bank runs, if we were to see people suddenly realize, oh no, I better get my money out the bank and put it in gold or Bitcoin or stocks or just keep it as cash under the bed. Okay, the moment you get the customers wanting to withdraw their deposits, the moment you get capital flight from the banks, they can no longer say, well, that's what I paid for it, so that's what it's worth. And instead, they have to mark to market the price and realize the losses. So very, very quickly, if we see capital flight from the banks, it will reveal all of this is complete fugazi, and of course it will cause bank failures. And so the big question here is, well, Camel, won't the FDIC just bail them out? And the answer is kind of yes and no. Okay, first of all, the FDIC insurance fund for depositors is $385 billion short of the total amount of losses on the held to maturity securities by the US banks, okay? So they have $385 billion less than the unrealized losses that the banks are holding. So when I said earlier yes and no, obviously this amount here cannot bail out this, okay? But they could, of course, always print money to the tune of, let's say, $385 billion and then use it to bail out. So it's a yes and no answer, okay? As it stands, the FDIC cannot cover the losses in the banking system, but of course they have the magical finger that can push the button to the printer and summon the $385 billion to plug the holes. So they can and they can't, okay? Will they, won't they? That's to be determined. And so this leads me on to a little bit of a side tangent here. Long-time viewers of the channel, anyone that has been following this whole thing, anyone that has ever seen this video, knows that I think this whole thing is a controlled demolition. And this right here, believe it or not, is pretty much the exact reason that I think this whole thing reeks of a controlled demolition to me. That's what I was showing in this video. Now, I'm not going to play the clip, I'm just going to read through this slide right here. But this is how the mechanism works for these unrealized losses during the C19 era, they used the whole thing as an excuse to print 80% of all dollars that had ever existed in an 18-month window. Okay, everybody knows that. We saw massive printing, massive inflation, et al. But here's what you probably didn't know. Okay, that freshly printed money was given to banks, and here's the key thing: the Fed, the central bank, who is of course the boss of the other banks, told them to buy the bonds and promised them that they would not raise rates, okay? So they print money, they give it to the banks, they say, hey, buy these bonds, and we promise we're not going to stiff you here, we promise we're not going to hike rates, okay? Only 3 weeks later did the Fed embark on the most aggressive hiking cycle that the world has ever seen. So needless to say, when you hike the rates and you hike them at a very aggressive rate, the bonds decrease in value and the yields go up. Why? Because of course they are inversely correlated. When yields go up, bond value goes down, and when bond value goes up, yields go down. So once again, let's take it a little bit slower this time, okay? They print a bunch of money, they give it to the banks, and they say, buy these bonds, we promise we won't stiff you. The Fed then stiffs the banks by raising rates faster than it's ever raised them ever before in history, causing all of these massive unrealized losses as a result of buying those bonds with the freshly printed money from the C19 era. And again, the issue is, at the moment, it's not really an issue because we are pricing them on a held to maturity basis. It is when they are forced to be marked to market, that's when we reveal these unrealized losses. That's when we cause things like the bank runs, and that is what could cause the banks to potentially collapse. So I also showed in this video, okay, that it came out that in 2021, the banks actually lost depositors' money and then hid it in the footnotes instead of notifying the customers. That's in here somewhere. That'll be in this section, I think, and this bit here. I pulled all the documents. This also led to one of the early forms of stealth QE that we saw in this bull market since the 2022 lows. Okay, this led to the BTFP, the Bank Term Funding Program. This was printing money and using it to plug those holes in the banking system that were caused by the Fed in the first place. So this is why I've been making the case that this whole thing reeks to me of a controlled demolition. Okay, keep in mind, I know I've said it a couple of times, but really process this. The central bank boss, the Fed, printed money, gave it to the banks, said, here, buy these bonds. Then it raised rates really aggressively after it promised it wasn't going to do that, and it caused this issue. So there's basically two ways to look at this. Was that an accident? Was that incompetence? Or did they do that on purpose to force these banks to be reliant on the central bank? I naturally have a tendency to go towards this was an orchestrated and planned thing. I don't believe this is sheer incompetence. I don't believe this was an accident. I think they absolutely knew what they were doing. I think they wanted to create this just so that they had the banks needing to rely on the Fed via various forms of stealth QE, such as this BTFP, and we saw other things like swap lines and stuff introduced later in the cycle. And then, of course, they just continue to raise rates and raise rates and raise rates and keep monetary policy overly restrictive, keep the pause at 5.25% to 5.5% for extended periods of time, all the while making these losses worse and worse and worse for extended periods of time. And so why do I think they're orchestrating a controlled demolition? Why do I think this is all part of the plan? And it's ultimately because I think at some stage they want to completely destroy and crush these banks so that they can usher in their CBDCs. Time will tell, as always. Maybe, okay, maybe just maybe I need to lay off smoking that thing I love to smoke. But needless to say, the FDIC is now warning that 66 banks, always has to be that number, right, face the possibility of insolvency after being added to its problem list. Again, is that really surprising that the FDIC sees a bunch of banks that are in trouble, given that this is the state of their balance sheet, and given that the money is currently just not there to plug the holes should the whole thing go kaput? So there is my rather long-winded explanation of this chart. I get lots of comments from people asking me to cover this and give my opinions and, does it matter? Well, if you didn't know, now you know. And this has been one of the reasons I am so bullish on Bitcoin and gold and silver, because over the coming decade, something has to give, okay? This is happening right in front of us, okay? You can choose to ignore it or you can choose to think there's something to it. It's entirely your prerogative. In the more short to medium term, as I said earlier, okay, go and get yourself a girlfriend. We're not going to hot knife the most important line of resistance in this entire bull market. And as Tony points out, we might have a little bit of a warning sign here. Let's put in our red line of bull market on-off switch. Note how the RSI has rejected at the 70 level, just like it did here. Okay, and what we saw was consolidation and a bit more pain. So maybe this is going to put on a situation where the yellow squiggle is going to be invalidated, we're going to have to chop sideways for a bit and be ready for the breakout later in life. Or maybe this thing's just about to turn around and blast off into overbought territory, just like it did all in here and in here and in here, which of course corresponded to huge pumps for Bitcoin. So time will tell, but once again, okay, we were never, ever going to just hot knife 9-month consolidation. That's just not how markets work, unfortunately. I do think, though, given that we've got a cycle low due around November 5th, we're probably going to work this thing out in the next few sessions. November 5th, cycle low, and then off we go to the races. And we probably are going to see what Bernstein suggests here, which is that Bitcoin will be breaking above $70,000 because the sentiment at the moment still screams risk on. There is still a wall of worry to climb. We're nowhere near euphoric yet, telling me to keep an open mind about something like this in the not too distant future. And so all that is left to talk about really are the charts. And to be honest, since yesterday, obviously, not a great deal has changed, okay? We'll start off with the dollar, okay? So as I was saying, this first daily cycle here is going to be right translated right now, and that's fine. But the question is, what happens to the next daily cycle? Because if it right translates again, then I'm probably going to call a bottom here. I'm probably going to call a 3-year cycle low and expect massive upside for the dollar, which really, given that the stock market is in third angles and thinking about breaking down, I mean, it kind of just fits the whole idea of blow off top, big deflationary bust, right? It fits that idea. But, of course, there is a chance that it seems to me a little bit of a crowded trade, just based on my experience, okay? It seems that the dollar lower is a bit of a crowded trade at the moment. But if we go right translated here for the dollar and then left translated and failed daily cycle, okay, that certainly puts on a downside scenario, and then hopefully we can get really, really, really blow off toppy in the rest of these asset classes. But everywhere I look, I see people saying dollars going to, sub 90 or whatever, or sub 100, and I've even been one of those callers. That was the call all the way from the top. I thought we were going to basically do this, get to here and then smash down to mid 95. Then this move kind of caught me off guard, and so did this move, and now really I'm being caught off a third time around. But when the market speaks, you've got to listen, right? If we couldn't break down there, we couldn't break down there, and now apparently we're rallying, if we chain together two right translated cycles, then it does put on this scenario from here. And ultimately, is that really, really different than how I had it drawn originally? I don't really think so. So we got to watch out for that. But unfortunately, I get a lot of comments on a near daily basis. Camel, what do you think of the dollar? Well, that's what I think. I don't know. We need to give this thing a bunch of candles, a good couple of weeks to see whether or not it puts on a scenario like this, okay? If it does something like this, right translates, and off it goes, then I'm probably going to be calling the bottom, like I said. If you are a dollar bear, if you think this thing is going down below 100, then, like I said, you also need to see a left translation and a fail come out of here. Otherwise, the cycles just do not agree with a downside scenario for the dollar in any way, shape, or form. Something else I think is really important to watch over the coming couple of weeks are the yields, okay? Now, the whole way down with this yellow squiggle playing out, I was saying things like, tell that to the bond market. And the reason I was saying that is everyone's always got their opinions, right, including me, and everyone likes to think that they know more than the Fed, or that they can predict what the Fed's going to do and all of this kind of stuff. But the reality is, the reason I just kept saying tell that to the bond market is because the bond market knows best, okay? It doesn't matter what our opinions are. It doesn't matter what anyone thinks their read is over the macro, or it doesn't matter how smart you think you are relative to Jay Powell. The reality is, when the yields are selling off like this, the bond market in aggregate is telling the Fed it's got to cut rates. Okay, but of course the inverse is true. If this is a breakout, and remember this is the 10-year yield, so this is what we call the chart of truth. If this thing is going to break out and this breakout's for real, then unlike when we were moving down here, okay, where we were saying tell that to the bond market, we are definitely going to see cuts. And of course we did get a 50 basis point cut. Now what we're seeing is the bond market say, whoa, 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 we think we might have made a mistake. Maybe things weren't as bad as we thought they were. If this is not a fake breakout and this continues to the upside, then the bond market is now saying everyone that thinks there's a cut coming is wrong. Okay, the bond market, if the yields continue to move higher, is now saying, whoa, 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 slow down, Fed. We don't want you to go cutting too fast. So as ever, like I said earlier, we've all got our opinions, right? We've all got our ideas. We've all like to think we're smarter than the Fed. But the reality is, yields moving downwards is Fed has to cut pretty soon and has to continue to cut. And yields moving up, like they are now, are saying we might even be putting a pause back on the table. So this is why I'm always so dismissive. This is why I always say things like tell that to the bond market, because ultimately none of our opinions matter. What matters is what the yields are doing. And again, right, you could see my expectation that this would be rejected at resistance and roll over. So far, that's not what we've got. And again, if we continue to see these yields push higher, then we are going to put more pauses on the table, or perhaps a 25 basis point cut. Currently, the CME still thinks we're going to see at least a 25 basis point cut, and that would make sense. A few days ago, we were at around 120 basis points behind the curve, okay, when you do the 2-year yield minus the Fed funds rate. We're now down to about 108 basis points behind the curve. Needless to say, this is going to continue to move higher if we do see a 25 basis point cut. But is a move higher here something to be championing and celebrating? Well, what did we see last time we got down to this kind of huge Fed behind the curve by 150 plus basis points? Okay, we saw this, and what did that correspond with when you look at the date down here? Okay, that corresponded with the GFC. What about the time before when we got down to support and bounced off strongly? What did we see? Okay, that would be the dot-com bubble bursting somewhere in here. So should we be championing this? Not necessarily. But then again, does this fit in with the whole base case hypothesis? Does this fit with the dollar getting ready to moonshot its way higher, as I showed you with that whole deflationary big yellow squiggle of mine? It does. Does all of this kind of make sense, given that we've been talking about this since the lows? Blow off top, 3 angles, third angle violation. Okay, it says right here in pink at the top, Dixie to 130, 140. Long the VIX. Again, we're getting dangerously close to finding that low and long in the VIX at the end of this month. So it kind of all makes sense, right? It does kind of all make sense. On a balance of probabilities, I do probably think it makes more sense to me to see this yield roll over and start to price further cuts. But, you know, we'll take it one day at a time. For now, similarly to the dollar, we're just going to have to give this thing more space because there's no way of knowing. It's far too early to draw conclusions here. Gold continues to push higher, and remember, the key thing to look for here, since we're on Tuesday today, is if this is going to left translate, it should be today or tomorrow that we see a reversal. So if we don't stage a reversal, then that puts on a new scenario where we right translate in this daily cycle, then left translate in the 5th to go down and find that weekly cycle low. To be honest, I kind of want to see this thing rip higher. That's really what I want to see, since I'm positioned for that by some miners that are starting to really outperform now. But either way, if we start to see some reversals and third angle violations, then I'm probably going to get short here, since we are late in the weekly cycle. I have had high success rates with that in the past. I think somewhere in this neighborhood I did quite well at catching it, and then somewhere in this neighborhood I actually was short going into the weekly cycle and had to flip long once we got this range break here. I also would consider shorting this market even on a third angle violation. Kind of like jumping in front of a train here. It kind of seems a little bit like picking up pennies in front of a steamroller trying to short a trend this powerful. But again, if the third angle breaks, then at least I've got a thesis to do so and an area on the chart to manage the risk around. Ultimately, I still think longer term, this is what we're doing, something akin to this. Notice how this would be a weekly cycle low due, you know, end of November, maybe early December. And then out of that, we should be seeing some bull market resumption. So overall, long term doesn't change much. Short term, still trying to extract some additional gains as and when the cycles present opportunity to do so. Stock market to me looks like it wants to come in for a touch of this third angle, and then we're going to get a reaction, whether that's a breakdown and Camel flips short and locks in the profit from all the stock trades, or whether we're going to make a touch of this and then shoot up. That's kind of what I'd like to see, but we are getting pretty late in this third angle. They don't typically last that long. And I'm seeing a whole sea of people very, very convinced that we are incredibly early in this cycle. And we're not. You're just not a cycle trader. Sorry to be the bearer of bad news. If you were a cycle trader, you'd know we were extremely late. So anyway, hopefully there is more upside, right? NASDAQ still kind of holding this level and not doing a great deal. Dow Jones coming back in for a touch of third angle, and similar deal, right? If it breaks down, then I'm going to lock in this 1,500 odd points. I think it might be a bit more than that. And if not, then hopefully we can get a touch and a resumption of the bull market for a little longer. But like I said, you know, longer term cycles they're coming to an end here. And we're seeing a whole heap of people saying this thing's just started. Well, I hate to break it to you. It's not just started, okay? Since November of 2022 or October, the Dow is up 51%, okay? Like nearly 15,000 points. You're not early to this bull market. You're incredibly late. Still expecting this VIX to roll over and give us a new low, and then hopefully we can get some hedges on, and that should be able to offset any kind of black swan that shows up if it were to do so. Not calling for one by any means. Russell 2K still doesn't want to emerge towards my 2,700 target, but I think it probably will at some point. And Bitcoin, as I was talking about at the start of the video, right? I mean, did you really think this thing was just going to hot knife the bull market on and off switch? Because that doesn't really make sense. My base case, as per my yellow squiggles, was that we might just have a pop up here, take all that liquidity, trap a bunch of breakout traders, and then sort of wreck them into that daily cycle low before resuming. It looks to me a little bit now like, I mean, there's always a chance we do this, okay, and then I won't be far wrong, but it looks to me a little bit now like we might be doing an ABC in here into that cycle low in November and then going. So either way, I'm fine. It doesn't really change much. I'm going to stay long and strong until that next cycle low, and then I'm going to be adding another position out of that cycle low with a stop below wherever the low forms. And you know, hopefully that should be that on our way to 100K. I do have enough experience trading Bitcoin to know that I see a lot of people in my comments and on Twitter saying, surely it's going to pull back to this level, or see you at 40K, Camel. I've seen all these kind of comments. And one thing Bitcoin loves to do is just lock people out. Okay, that's what all of this whole move off the lows was, right? This was very, very quick to go from 18 to 25K. And then everyone was going, oh no, it's bearish, it's bearish. And the whole time through here, people were screaming at me, saying like, what the hell is left translation? What do you mean all-time high before the halving? The thing's clearly going back to new lows, or at least a retest of 16K. And then again, in a matter of weeks, it was a doubling again to 50K. Everyone was going, biggest bull trap of all time. We had like massive accounts here selling a 702 retracement and all that kind of nonsense. And then again, in a matter of, how many sessions is this? 50 days, right? Not even 2 months. Bitcoin rips again and does another doubling to about 73K. So this is what I mean when I say Bitcoin can do Bitcoin things. There's a whole heap of people out there thinking to themselves, well, it has to go 60K. Well, I'm not touching it till 49K. I'm not touching it till 40K. But most of the way you harm these people, right, is just to do that. Have this big squeeze that only lasts 8, 10, 12 weeks, up to 100-ish K, and then the whole thing collapses and leaves everyone thinking, oh my gosh, I ruined my entire opportunity. I got the entire cycle wrong, right? So that just makes sense to me that we're going to do something like this, cycle low and moonshot. We'll find out, okay? We still have to be open, of course, as always, to Bob Lucas's scenario into that weekly cycle low and go. We also still have to be open, I guess, if this thing continues down, to actually seeing perhaps even a second angle touch or violation. This one is the one I think is the least likely, because we've just spent so much time in here wearing everyone out that it seems like now would be the perfect time to just, like I said, lock them out, just like it did back here, just like it did back here. The thing moves so fast that people can't keep up with it. And again, it kind of goes back to this, we'll finish how we started here. There's so many people that see a 3% candle for Bitcoin and they go, oh, it's dumping. Every time you post, it dumps, right? But I mean, it shows you how inexperienced they are, and it shows you how unable to handle a volatile asset. This is a 70 volt asset, and it went something like 32%, okay, in 40 or 45 days. And then from that high, it pulled back, what are we down now? 3.8% in the last 2 candles. And people think this is a dump, okay? How come we're not counting this move off of here? How come we just ignoring the 32% before the minus 3%? It speaks to, like I said, people just can't handle the fire. It was the same in here. There's a 174% move in 150 days. People are just not mentally prepared to sit on board something like that. And I see a whole heap of people saying things like, this is the worst cycle ever. Okay, this is the hardest cycle ever. Bitcoin hasn't done anything. But the reality is, from that low approximately to that high, we did 350 odd percent. Even today, at today's price, after the quote brutal rejection or massive dump again for Bitcoin, okay, we are up 315%. And so I say this out of love and respect. If you're not up close to 315%, if you're a trader, you should be up more than that, okay? Because, for the long-time viewers of the channel know, we had leverage positions that caught the bulk of this move, okay? Yeah, we paid a few stops on some cycles on the way down, but I must be above 1,000% for my performance on this Bitcoin cycle, just trading Bitcoin, and that doesn't include the miners. And so if you're not close to 300%, or if you're sitting on a loss here, ask yourself, what is a better use of your time? Is it better to sit on Twitter all day telling people the thing's dumping and watching a 2-minute chart or a 1-minute candle or a 5-minute candle? Or is it better to look at what you did and try to learn from your mistakes, try to improve, try to come up with a game plan and a system for how you can actually extract some profit out of this market? Because for those of us that have been here before, for those of us that have been getting in at the right time, this has been an incredibly easy and profitable cycle. And yet everywhere I look, I see people, don't spend your day right in it's dumping after a 3-minute candle when we moved up 30-something%, 32, 33% in the prior 40 days. That's not useful. Once again, okay, you need to find yourself a girl, mate. Just do anything other than watch the 1-minute chart, okay? Anyway, I say that out of love. Please do hit that subscribe button if you want to see how I handle the upcoming cycle low for Bitcoin. Please do hit that subscribe button if you want to see me handle the rest of this gold cycle. And, of course, follow along as we continue to extract as much profit as possible from the stock market during its third angle. I'll also be looking for that hedge with the VIX towards the end of this month. So hit that subscribe button, turn the notifications on. Needless to say, if you're a level 3 member, you'll get notified in real time with exact levels. And other than that, have a fantastic week. Touch grass, at least wait for a daily close. I'm your boy Camel. Peace.